Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 11th of November. Let's dive into the week's stock market news. Rate cuts and turmoil shake Europe's economy. In local currency terms, the Pan-European Stocks Europe 600 index ended 0.84% lower. Worries about the impact of U.S. President-elect Donald Trump's trade policies on European economic growth and central bank policy weighed on sentiment. Major stock indexes weakened, with Italy's FTSE MIB losing 2.48%, France's CAC 40 index declining 0.95%, and Germany's DAX softening 0.21%. The UK's FTSE 100 index eased 1.28%. In a week of significant economic and political developments across Europe, central banks in the UK and Sweden lowered interest rates, while Norway held steady. Meanwhile, the Eurozone saw signs of stagnation, and Germany faced a political crisis with the collapse of its government. The Bank of England opted for its second rate cut of the year, reducing the bank rate by a quarter point to 4.75% in response to continued deceleration in inflation. Governor Andrew Bailey hinted at further gradual reductions if the economic trajectory remains as anticipated. Echoing this sentiment, Sweden's Riksbank also lowered its key rate by half a percentage point to 2.75%, citing concerns about slowing inflation and a sluggish economy. Policymakers suggested the possibility of further cuts in December and early 2025 if the economic outlook persists. In contrast, Norway's central bank maintained its policy rate at 4.5%. Signaling a likely pause in December. This divergence in monetary policy highlights the varying economic conditions across Europe. Adding to the complexity of the situation, the Eurozone's economic picture remains uncertain. Despite a revised Purchasing Managers' Index, PMI, for October, which now indicates stagnation rather than contraction, business confidence has dipped to its lowest point this year. Further unsettling the landscape is the political turmoil in Germany, where Chancellor Olaf Scholz's coalition government crumbled after he dismissed Finance Minister Christian Lindner. This has triggered calls for a snap election amidst concerns about economic uncertainty and the potential for prolonged political instability. This confluence of events, diverging monetary policies, economic stagnation, and political upheaval, paints a picture of a continent grappling with complex challenges. The coming months will be crucial in determining how these factors interact and shape Europe's economic future. Now our insight into alternative markets, Australia's space race. Private equity takes off with Gilmour Space. The Australian space sector is experiencing a surge of excitement, with Gilmour Space securing the nation's first orbital launch license. This milestone achievement signifies Australia's growing prominence in the global space race and presents a wealth of opportunities for private equity investors. While Gilmour Space has already achieved significant progress, it remains a company in its growth phase, making it an ideal target for early-stage investments. Capital injections at this stage could fuel the development of advanced launches, enhance the infrastructure at the Bowen Orbital Spaceport, and foster the expansion of the Australian space supply chain. Furthermore, the escalating global demand for space launches positions Gilmour Space as an attractive prospect for growth equity investments. This funding could facilitate the scaling of operations, boost rocket production, and empower the company to compete more effectively in the commercial launch market. Venture capital funds specializing in space technologies are also likely to recognize Gilmour Space's potential for rapid growth and its competitive edge within the burgeoning Australian space market. However, navigating the competitive landscape of the space launch market, dominated by established players like SpaceX and Rocket Lab, will be crucial for Gilmour Space to secure long-term investment. The company's focus on hybrid propellant rockets, a potentially more efficient and safer technology, presents a promising avenue for innovation and competitive advantage. Investments in research and development could accelerate advancements in this area. Expanding the network of Australian suppliers is another key area for investment. Strengthening the Australian space ecosystem through supporting local companies will not only benefit Gilmour Space, but also contribute to the overall growth of the national space industry. In conclusion, Gilmour Space's success heralds an exciting chapter for private equity investment in the Australian space industry. By adopting a targeted investment strategy and carefully evaluating risks and opportunities, investors can potentially reap significant long-term returns from this dynamic and rapidly evolving sector.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.